Hey there, crypto aficionados. Welcome back to the SimpleSwap podcast. Just like the scorching temperatures of July, we've got a hot episode lined up for you, jam-packed with sizzling updates and electrifying developments in the crypto world. So stay tuned to find out what was the resolution of the 3-year trial of the SEC against Ripple, why Gemini is suing Digital Currency Group, and what dangers are there in posting memes. So get ready to strap in and hold on tight, because it's about to get wild. I'm your host Dan, and we're diving straight into the epic saga of Ripple's much-needed victory. The US District Court has ruled that XRP ain't no security when it comes to crypto exchanges, marking a monumental win for Ripple. But hey, there's a twist. XRP still has some security status when sold to the big guns, aka institutional investors. It's a gripping courtroom drama that has sent XRP soaring to the stars, claiming the coveted title of the 4th largest crypto asset. But beware, the SEC isn't backing down just yet. They're hinting at a possible appeal in the future. So make sure you stay tuned, folks, because the battle's not over. Now hold on to your hats, because we've got some major players vying for a seat at the Bitcoin ETF table. BlackRock made a daring move and filed for SEC approval. And guess what? 4 other investment heavyweights followed suit. It's a high-stakes game of ETFs. But the SEC's been playing hardball, rejecting initial applications that dealt with futures and indirect exposure to crypto. But these players are relentless. They've reloaded and reapplied, and now the SEC's in the hot seat, making critical decisions on updated offers. It's a showdown you won't want to miss. And speaking of regulation, on July 26, the US is raising the stakes with a new bill, advanced by a congressional committee, that aims to lay down some crypto ground rules. This powerhouse bill would bring much-needed clarity, distinguishing when a cryptocurrency should be treated as a security or a commodity. Plus, it's giving more muscle to the Commodity Futures Trading Commission, or the CFTC, to regulate the crypto sphere while carving out the SEC's role. It's a bold move, and experts are calling it a win for crypto, providing the clarity the industry's been craving. A breath of fresh air in the regulatory arena, no doubt. But hold up, folks, because we've got some legal fireworks too. Gemini is taking legal action against Digital Currency Group, or DCG, and its CEO, Barry Silbert, accusing them of committing fraud against creditors. DCG owns Genesis, a company that lends cryptocurrency, and they were in charge of running an Earn program, which was launched in 2021 in collaboration with a crypto exchange. The reason for the lawsuit was made public through a letter written by Cameron Winklevoss, one of the co-founders of Gemini. In his letter, he criticized Silbert for trying to portray himself as a victim, despite owing more than $1 billion to investors in the Earn program. Winklevoss even compared Silbert's behavior to that of Sam Bankman-Fried, implying it was highly delusional. Now, here's a heads up for all you meme lovers out there. Be careful in the crypto world, especially in the UK. The Financial Conduct Authority, or FCA, of the country issued a draft guidance on July 17, focusing on financial promotions made through social media, specifically targeting promotional memes and financial influencers, also known as finfluencers. So you know they mean business. The FCA isn't messing around, so tread carefully in the meme jungle. And if you thought the Celsius network was in the clear, think again. The former CEO Alex Mashinsky and the ex-chief revenue officer Ronnie Cohen-Pavon are facing some heavy charges by the US authorities. It's a serious case of securities fraud, commodities fraud, and wire fraud, all tied to the alleged manipulation of the Celsius token's price. The CFTC isn't taking it lightly either, slapping them with a massive $4.7 billion fine. They claim that the co-founders of Celsius falsely marketed the platform as a secure place for customers to deposit their currency while misusing over $4 billion of customers' assets. The Securities and Exchange Commission, SEC, also filed a lawsuit against the company based on similar allegations. While Celsius is cooperating with regulators, Mashinsky has pleaded not guilty. It's a legal shootout that'll keep you on the edge of your seat. But hey, we are not done just yet. How about some virtual McNuggets to spice things up? McDonald's Hong Kong is taking the Web3 world by storm with McNuggets Land in the Sandbox metaverse. It's a chicken nugget extravaganza celebrating 40 years of the McNuggets. Dive into its rich McHistory, quests and games, earn rewards, and gobble up some Sandbox tokens. It's a Web3 feast that you don't want to miss. And that's a wrap, guys. Thanks for tuning in. We've covered all the fiery news in the crypto universe, but we want to hear your thoughts too. Drop them in those comments and hit that subscribe button for more crypto greatness. Until next time, stay tuned, stay hyped, and we'll catch you on the flip side.